So today we are going to get into an in-depth market analysis with Vora at Midweek with Indiacharts. Hello everyone, this is Shilpa Raidas, and I'm glad to begin this Midweek with Indiacharts session once again. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good. Thank you so much. So, Jay, I'm very excited. I've got questions for you about the rate cuts, market movements, and also the commodity trends. Beginning with the first one, Jay, the Bank of Canada has cut the rate recently. And today we are also going to have the ECB meeting, and they are likely to cut the rate as well. What does it mean for the equity markets and what's going on in the US indices, Jay? Also, please tell us what's your take on the dollar index, gold, and silver. Jay.
Right. So yes, you're right. I mean, Bank of Canada, they have cut the rate by around 25 bips. I think ECB meet is there. I think the Indian timing is 5:45 or so. So they are also likely to do the rate cut. And this in general is positive for equity market because it means, the liquidity is rising. And typically when the liquidity rises, that has a positive impact on the equity market. So yes, so that is what we are looking at. Now, there are few concerns in the US that, the inflation is not falling to the extent, which was expected. But nevertheless, I mean, we are seeing the trend in that direction. And in fact, recently we have also seen crude oil also cooling off significantly from its recent high. So even that will add to a positive impact on the CPI as well. Maybe if not, this month, then in the coming month. But yes, broadly, I think, if we see the overall context, then everyone has started to do the rate cut. That is a good sign. I think eventually, even Fed might have to do that. In fact, I think there was one of the data point which had come in US last week. After that, the chances of rate cut has increased in the September meet. I mean, that is what the expectation is. Now, whether that happens or not is a different thing. But I mean, it's all about perception as well, right? And markets do try to anticipate based on that. I mean, the market movements are based on those anticipations. So I think so that is the good part. The other thing is that I think we had discussed this in length as well, that gold, silver, they already have a bullish setup on a higher time frame. So even there, it seems like whatever short-term correction that we are seeing, that looks done, and they are likely to take off as well. And when they take off, it generally means that the dollar will go down, and that is actually useful for the liquidity condition. I mean, let me put it that way in a simple term. In fact, even Bitcoin is sort of consolidating towards its upper end of the range. So all these things are sort of suggesting a bullish trend, at least in the near term. So wait, let me share my screen. So look, we were talking about the US indices, last week. And over there, there were some concerns that, Dow Jones Industrial, it was kind of lagging, and it had, it was around to the area where it was going to break the 20-week. It had actually broken the 20-week average for a while. But, this week, again, we have seen, Dow Jones index pulling back. But at the same time, now, when you look at the S&P 500, it has nowhere touched the 20-week. And that sort of tells you the strength. Also, because when we see on the daily chart, what has happened is that there was an up move. There was a pullback till the 40-day. So ideally, we would have liked if the cycle would have complete. But yes, I mean, given that now it is breaking above its previous high, this does indicate a new leg on the upside. And when we at the weekly chart as well, that sort of suggests the same thing, everything green. So this typically is, one entire impulse. Then there was a pullback, and now the uptrend is continuing. I think similar pattern is there in NASDAQ 100 as well. So, the broader point being that NASDAQ 100, S&P, these are the stronger indices in the US index. And as long as they don't reverse, the broader trend or the undertone is bullish. Now, when we look at the setup of gold, silver, that specifically is looking very interesting. The reason being that, we have seen a meaningful consolidation in gold. Okay. And over here also RMI, you can see that, it has gone back below the zero line and now it is, possibly turning around. And if we get a bullish crossover, that would be very good. And mind you, this is happening ahead of the non-farm payroll data that we are going to get tomorrow from the US index, that can have a significant impact, specifically on gold and silver and overall to the market as well. So that's where I think, ahead of the non-farm payroll that we are going to get tomorrow, which is like a big thing that, people will be watching out for. Ahead of that, the setup is very good for gold and silver. And in fact, even if we look at the dollar index, so yes, dollar index is also making lower high, lower lows. And when we look at the weekly chart, over here as well, it is on the verge now of breaking the averages. And if that happens, just immediate levels on the downside will end up becoming the lower band, which is, say right now around 102.3. And in fact, when we look at the daily chart, there is a small channel breakdown that we have seen. So if I draw a trend line over here, so, this was sort of a pullback that we were expecting. And I think it did not really touch the upper end. But from here only, it has started to decline. And it is, and it looks like that the next leg of decline is starting. So I think if we get a weekly close below these averages, so the 41 is at the lower, is lower than 20. So which is 104.89. I think once we get a closing below that, we are likely to see a drop to 102.35 or something. Sorry, this I think is a different dollar index. Yeah. So TVC is the one. Yeah. So this is the one that we usually see. So over here, the 40 week is at 104.26. I think once this is broken on the downside, the gates will be open for a down move up to 102.70 or so. And this again, I think will have a bullish implication on, even equity markets and gold, silver. And specifically for the silver, the setup is even more interesting. The reason being that, this was a 5-wave rise, 1, 2, 3, 4, 5, I think. Then there was a pullback that we had seen. Now this was again an impulse for which we have seen a pullback. Now ideally over here as well, we would have liked if the RMI would have gone to the zero line and then give a bullish crossover. But it is turning around just above the, the zero line. But nevertheless, the setup is good. Because even in price terms, it has nearly pulled back to the 40-day exponential average. So I think over here as well, if we end up seeing a pickup, then it should, this time around, it should break above the previous high. And also one thing which, if people follow technically also, so wait, let me do the weekly chart and let me hide the drawings. So over here, what has happened is that, this very big range, we were not breaking in silver, right? I mean, so over here. Now what has happened is that it broke on the upside, okay? It has retested this point and now it is trying to, inch higher. So one thing, as a confirmation also, what people can look out for is that if say in gold as well, we get a positive weekly close, right? Then this will become, then the low will become an extremely important support level. And if that doesn't break, then ideally we should see gold heading higher even to 2500 sort of levels. In fact, even in silver, if we end up getting a positive weekly close, then even better, because then that would be a sign that the up move can continue. And like I said, on the daily chart, I think even if we close above the 20-day average and, silver reclaims that would be bullish as well. But, then later on, what we would like to see is, RMI turning around and then give a bullish crossover and so on. But yes, the setup over there is very good. And I think I was even talking about Bitcoin. So yes, Bitcoin also, if you see, it is sort of, consolidating at the upper end of the range only. And this actually is a very bullish setup. So I think once the high is taken out, I mean, this previous high is taken out on a closing basis, then we might have some sort of, breakout as well. In fact, I think even on the weekly, it would have respected the averages. So 20-week average was respected, and now it is starting to inch higher. So broadly, even in Bitcoin, the setup is good. Then, like I mentioned, S&P, it is breaking above the previous high. So everywhere, if we see, especially in gold, silver, or equity, the broader trend is bullish. And in fact, dollar index is giving us the sign that it can possibly break down this week. So we need a closing below 104.26, which was the 40-week. I think once we have that, there will be a breakdown confirmation in dollar index, and already equities are sort of confirming us on the upside.
Wonderful. That was very elaborated. Thank you for that, Jay. So, Jay, let's talk about Nifty now. What we see is that the Nifty index has been all over the place in the past few days, right? And also in the last 2 days, we have seen a smart recovery across the indices. Can we see this runway rally continuing, or will we see a pause? Also, Jay, please tell us what are the sentiment indicators on strike suggesting right now?
Right. So I think, yes, this is very important. So, earlier I was actually drawing this channel as well. I don't know why I took that channel out, but I think it was something like this. Sorry. So yeah, it was basically this channel, what I'm talking about, right? So what had happened was that the Nifty index had touched over here, uh, I think just in late December or so. And after that, we have seen a very big consolidation. So typically what happens is that from the upper end, you usually come down to the lower end. So this time, due to a very big consolidation, this lower level has kept rising higher. Now, due to this election drama, we had seen a very sharp decline, but this is something that we have highlighted in the update, in the intraday update video as well, while we were doing that. Uh, the Nifty index has already hit the 40-week exponential average, right? And 40-week exponential average is like a medium-term defense for the bull. I mean, if the 40-week breaks on the downside, then there can be some meaningful correction that we can see. But the good part was that due to election, we got that knee-jerk reaction, right? And honestly, at that point of time, it would have been very difficult to say which way things can go, because there was a lot of things that were involved. But now when we see, I think tomorrow we have to wait for the weekly close to see. But I think most likely the 20-week will be defended, which is at 22,275. Now the bigger question that we have is that whether we are going to see a runaway rally from here, or we will see a consolidation, right? Now, I think if we have to go by the past, so wait, just for the benefit of everyone, I'm just showing you the pattern. So see, typically what happens is that when we get such large correction in a day, right? So usually what is followed by that is a phase of consolidation, because over here, I mean, there is a lot of tug of war between bulls and bears, and there will be a lot of positioning which people would have done due to that. There would be stop losses hit and so on. So that's why we end up sometimes getting a very sharp fall and then a very sharp pullback. The easiest way to understand is that what happens if you throw a ball from the 10th floor. I mean, the bounce will equally be very large, right? So this is what has sort of happened. I mean, we had a very sharp decline, and we have a very sharp pullback. But I think eventually we will see volatility subsiding. And once that happens, we may end up seeing some kind of range bound movement in the Nifty index, and only then it may pick up. Now, this is true. I mean, when we look at the historical data, like I mentioned, So say, for example, something like this 2008 happened, right? I mean, there was this sharp decline. So immediately what we saw was a very sharp pullback, right? But after that, it saw a consolidation. So there was this base formation that happened, and only after that it picked up. In fact, something very similar happened in 2004 as well, as you can see over here. So wait, let me do the daily chart. And actually, this candle had formed because of the election outcome only. I mean, there was some surprise in the election, and due to which we had seen such a knee-jerk reaction. So over here also, see what happened was that there was a very sharp decline, as you can see over here. And after that, there was an equally sharp pullback as well. But what followed after that was, some sort of consolidation that happened. And only after that, it started picking up gradually. So that is what I think is expected this time around as well. So in Nifty index, we have seen a very sharp decline. So yeah. So over here as well, we have seen a very sharp decline. What may follow next is that some sort of consolidation to happen, and only then after we pick up. But honestly, if you look at the sentiment data, I mean, that is looking very bullish. So wait, let me open the sentiment indicators. So over here, if we see the FII's index positioning, so it has reached the second extreme, right? So this, as you can see, I mean, when it was over here, what followed after that was a very big up move, right? Over here also, when the FI's positioning got oversold, after that, we got a very meaningful up move, right? So this time around as well, the setup is very similar, where the FI's positioning has now come to the second line. So the second line is actually 3,40,000. So for a brief while yesterday, I think their short positions had hit 3,55,000 contract, right? And from there, we have seen some covering yesterday. I think even today, there might be a buy figure from the FIIs. Now this, when I see clients positioning, okay, so clients generally do ulta, which means that when the markets are falling, right, their long position is at the peak. So you can see over here that even the client positioning is at an extreme, like they are extremely long. And typically when we have such sort of patterns, where both of them are at an extreme, so that's where a very good setup has emerged from a medium term perspective. And if you just want a sense of what kind of up move do we see, so yeah, I mean, over here, when this bottom occurred, from this low to high, this was a 20% rally, right? Now, when we do it from this bottom to, let me even take this high, okay? So this comes to around 17%. So even roughly say around 17 to 20%, the up move, if what I take, so then, it can be very substantial for the Nifty index. I mean, if I do a 17% as well, that works out to around 25,650 or so. So, this is just based on the data, I'm telling. Obviously, some kind of up move, whether it is going to extend or no, that we'll come to know. But, the next actionable point would be then when they reach to the other extreme, right? Right now, they are at this extreme. Now, this is actually telling us that there can be a big short covering rally that can play out, right? Now, whether it does or no, that we need to see. But like I mentioned, our best guess is that maybe in the near term, we do some sort of consolidation. Okay. In this case, we need to see, I mean, how the positioning of the FIs and the clients unfold. But I think once the dust settles, that's where we should see an up move. Now, it's not to say that, it cannot see a runaway rally right away, but that is not a base case. Let me put it that way. So the broader point is that from a medium term perspective, it looks bullish, right? The only question and the only fine tuning that we are trying to do is that okay, short term mein kya hoga, whether we get that zigzag sort of market and we consolidate and only then move higher, or we move higher right away. So that is something that we need to see. But I think a lot of, I mean, we are sort of going to see a lot of sector rotation. That is what the sense is, because see, when we look at something like Nifty FMCG, which has started to perform after the election. So over there as well, when we look at the weekly chart, this looks very nice. The reason being, there was this pullback. It had come to the 40-week exponential average. And from there, it is trying to take off, right? And over here, we have the weekly RMI that is giving us a bullish crossover. In fact, when we look at something like Nifty Pharma Index, over there as well, the setup is encouraging. So what has happened is that, there has been this range bound movement that we have seen in pharma. Typically, technically what we say is that there is an uptrend and then this is a sideways consolidation. So I think once over here, when we see a range break on the upside in the pharma index, this should again be a sector that can go up and can see a meaningful up move. In fact, Nifty IT is the one where, at least on an hourly chart, for the first time we have seen impulse move happening, which means that this 1, 2, 3, 4, and now within 5 we are seeing 1, 2, 3, 4, 5. So again, I think this is very encouraging. So basically what we are going to see is probably a sector rotation, in which case I think Nifty PSC, I think that is, hot favorite for everyone at this point of time, because I mean, we had seen a massive decline over there. But I think what is happening is that it has gone up way too fast on the upside. So I think over here, there will be a case, maybe, it may take some time and then come down. And, it either forms some sort of triangular structure or an ABC structure. And ideally, when it gets back to the 40-week exponential average, right? So that's where we'll end up even seeing the RMI completing its cycle. And then when it gives a crossover next time, that will be a very good sign. So broadly, we are not questioning the larger trend of PSE because, to people, I think we have explained this in length earlier. So what has happened is that this entire bigger range has been broken in 2023, right? And after that, we have seen a runaway rally. So at some point of time of this larger move, there will be a pullback that can happen. Okay. I mean, that is a natural phenomena because it cannot keep rising higher and higher without any major correction. If that happens, then that is actually very bad. So this correction that we are that is happening or that has happened in the PSE, that is a good sign. And ideally, we should see, PSE taking some sort of rest over here because that will, lead to RMI also completing its cycle. And that's where then the next leg of the up move, can happen. So, broadly what may happen is that the Nifty index, probably may not fall much and it may just do a sideways consolidation over here. But we will end up seeing many sector rotation. And for that matter, even if you see reality that has gone up one way and it is not breaking down. In fact, capital goods is the one where we had again seen runaway rally. And in all these cases, we are having multiple divergence on the weekly chart and the cycles are not complete for almost 1.5 year now, right? In fact, 1 year now. So that is why I think we may see some of the sectors taking a backseat, right? And some of the sectors, which were laggard or which were not performing, they may make a comeback. And that is how the market will be. I mean, it might not be an easy market, but I think we are doing this webinar this Saturday on Heatmap. So that is basically to, find out which sector or stocks that can perform very well. So, many of the listeners who would want to register for this webinar, it's for free. They can I mean, they can join this webinar. So over here, the technique that we will try to teach is that how to find the stocks which are strong, right? So that's what will help them to navigate this phase, which I feel is likely to be, some sort of a consolidation phase. So mainly, the reason why we are thinking of this consolidation phase is because we would want to see RMI going back to the zero line, right? Like it went over here, and then when it gave an up move, that was a much powerful up move, right? So that is what we would want to see. Now this has happened in a flash. I mean, ideally, the downside target also what we would have expected would have been the 40-week average. But this has just happened in a flash, and due to which we have not seen RMI going back to the zero line. So I think some bit of consolidation over here, and we would be good from a medium-term perspective then. So the sentiment data, like I mentioned, is already showing us that. In fact, now even the short-term indicators, if we see the breadth, that had again come back to this first red line. In fact, I think the OIPCR. So OIPCR has also come back towards the oversold zone. In fact, average swing, daily swing, they had gone back to the oversold zone on the election day itself. I mean, at one point of time, the reading was 2 or 3, right? I mean, suggesting massive oversold zones. But yeah, I mean, from there also, we have seen a good turnaround. So yes, broadly, I mean, if I have to say, the sentiment data is looking encouraging, and it has a good short-term and a medium-term setup as well. All we now need to see is that when does this OIPCR also turn around? Because when this turns around, that will sort of tell you that more people are willing to short puts, and that's the reason this this indicator is going up, and that will sort of lead to the downside capping that may happen. I mean, we may not see a major decline as well, but what may just end up happening is that we end up getting some sort of consolidation happening. So that is what we would be looking out for. But yes, I think if the high breaks, then we have to set up our expectation for the next leg of up move. In which case, like I mentioned, I mean, if we go by the historical data only, which was, I mean, we have seen that 17 to 20% kind of move, whenever the FIs and the client's position have got to extreme. So that scenario will come into play. So yeah, broadly, I think that is what we are looking at, and that is how we are thinking, at this point of time.
Wonderful, Jay. Thank you so much for the clarity. And that was a lovely session. I would like to, in fact, tell our viewers about a very important milestone that we had for Strike, just 2 days back, and also for India as a whole, because Strike has finally launched the RRG. It's a revolutionary tool that is the relative rotation graphs. And basically, RRG charts are a revolutionary tool that is used for traders to visualize the relative strength and momentum for various stocks or sectors against a benchmark. So this is absolutely awesome. I would urge you guys to go on to Strike and check out Strike as a whole and RRG, of course. Log into web.strike.money. You get a 7 days free trial, so go and get in right away. And also, as Jay mentioned during the session, we are actually having a webinar series right now. So we have 4 webinars in this series. The first one is already out. We had that on the 25th of May. We are having the second webinar of it on the 8th of June. That's the coming Saturday. So on the first webinar, we had discussed about short-term, medium-term, and long-term tops and bottoms in the Nifty index through our sentiment indicator. This Saturday, we are going to discuss how can you find sectors and stocks using the relative strength analysis with the help of Heatmaps on Strike. Okay, so this is going to be very powerful for you, given that you know how to use it well. So Jay will explain this entire analysis real time for you on the webinar. The webinar link will be on the description. Please go on. It's a free webinar, like I mentioned, and also I'll be leaving down the details of the third and the fourth webinar as well, so that you are prepared to attend it the next Saturdays. So Jay, thank you so much for the lovely session. We had a great time. I'm looking forward to already seeing you the next week. Thank you so much. Take care.